Good day, guys. I hope everyone is doing well. So this is our session on liquidity, right? This is our session on actually it's liquidity and inducement. Okay, they are both liquidities actually. Um, so liquidity, okay, have liquidity and inducement, okay, and inducement. Now I'll explain everything to you guys for you to understand. But what you first have to understand is that we are smart money traders. Okay, smart money traders. And we say smart money traders. What we mean by that is we try to replicate the behavior of the big institutions. Okay, the banks and all of that. We replicate what they do. Okay, we are trying to trade like them. So sometimes when you go on the internet, um you see people saying something like um something like retail traders, retailers. Fine, we are retailers, okay, because we are all trading. Like we are not trading with big institutions, but smart money traders are also retailers. It's just that they don't use retailers' ideas to trade. When we talk about retailers' ideas, it is the support and resistance, the trend lines, okay, the trend lines strategy, the support and resistance. Do you guys get it? The support and resistance strategy and all of that. Okay, that's what we mean by retailers. Okay, the breakout and retest strategy. Do you get it? That's what we mean by retail ideas. But that's not how we are going to trade. So if you are lucky by any chance and then you've gotten into support and resistance by yourself, maybe you've learned it somewhere, you've learned supply and demand, that's actually a very nice thing that you have at least an idea of it. It's just that right here, right now, whatever I'm going to teach you, okay, that is my strategy. I don't use those words. And even though it might be, or it might seem like I'm using a support and demand, or a support and resistance, or supply and demand, that's not how I see it. And I want you to see it in a way that I see, so that you can trade like me. But don't limit yourself into trading like me, or don't limit yourself into seeing things like how I see it only. But as I said, this is how I trade, and that's why I'm doing this video. All right. So now that we've gotten that out of the way, what I want to talk about here today is liquidity. And when we say liquidity, what is liquidity? Personally, I would say liquidity is a fuel, okay, that moves price, okay? It's a fuel that moves price. Let's say a car, right? There is a car, and then the car has to move. Now, if there's no petrol or there's no diesel in the car, there's no way that it is going to move, right? So that's what liquidity is in the market. Liquidity moves the market, okay? So if there's no liquidity, the market doesn't move. And I don't know how to put it, but then I want you to understand that liquidity is the fuel. But then again, the real explanation of liquidity is an area or a level, okay? Liquidity is an area or a level, okay? An area, an area or a level that institutions, okay? Institutions purchase price. Okay, purchase price. Okay, of a specific, at a specific level actually. Okay, the purchase price, right? It's already there. A level that an institution purchase price. Okay, so at that level, okay, at that level, there are also traders like us. Okay, traders like us taking advantage of that decision that the institutions make. Okay, now no institution is going to tell you that they are doing this. Do you get it? No institution is going to tip you off that, hello everyone, we are buying at this price, so everyone should buy. No, but then you will see everything on the chart. Okay, there are things that tips off traders that institutions are doing this. So basically, that level, okay, that level that institutions are buying, okay, let's say a level like that, right? At this level, okay, at this level, institutions will do what? Buy here, right? Now, when this happens, okay, when this specific thing happens, what it means to um read the retailers, okay? What it means to us is that we also take position from this place. But then you see in trading, we have stop loss and then we have take profit. So when we take a position like this, okay, when we buy from here, okay, when we buy from this level, um, sorry guys. So when we buy from this level, okay, not this. When we buy from this level, this specific level right here, okay, what it means is that we are going to put our stop loss somewhere around here, okay, and that is where the liquidity is resting. Okay, that is where the liquidity is doing what? Resting, right? So what I'm trying to say is that institutions purchase price at a certain level. Okay, institutions purchase price at a certain level, and at that level that institution purchase the price at that level like that, okay, that way the retailers try to reciprocate or replicate the action. We will put our stop loss below that level, right? And for that matter, price is likely to come back and take us out of the market, okay, and take our stop losses. So basically, liquidity is always at where one an obvious place where people put their stop losses. Okay, please don't get it twisted. No one is actually hunting for your stop loss. No one is trying to no one is trying to how do I put it? No one is trying to take your stop loss or anything. No one is trying to take your money here. But the whole point is that since there are a lot of stop losses there at that level, okay, since there are a lot of stop losses at as a level like this, okay, price is likely to come back to that place because there are a lot of orders there. Now that stop loss that you put there is called a stop order. So price needs to come back to that place because what, there are a lot of orders there, and that's what we call the liquidity. right? I want to explain this in the simplest way for you to understand. All right. So now, where is liquidity? Okay, what are the types of liquidity? Okay, there are types of liquidity, yes. And so, where would you find liquidity? When you look at the market, where can you actually expect price to come back to? Okay, now we have double tops. Okay, we have double tops. This is a pattern, right? Retailers pattern, apparently. Double top, something like this. Now when you see this, when you see something like this is what we call a resistance, right? This is what we call resistance. This whole area is an area of what? Resistance. So price came there for a first touch, and then a second touch, and it wasn't able to break through. Now, if you understood what I said earlier about price, people putting their stop losses at a specific place, we all know that anyone that actually takes this position to the downside from here, okay, what they're going to do is they will put their stop loss around somewhere here, or even somewhere here, and price is likely to come back to that place. So liquidity act like a magnet that pulls price. Okay, that's why I said it's like a fuel, okay, that moves the price. So it acts like a magnet that pulls or attracts the price towards it. So anytime in the market, okay, anytime in the market is either looking for liquidity or looking for prices to rebalance, and we will get there. But what you have to put in your head right now is that liquidity moves the market. Okay, so since people put their stop loss somewhere here, the price is likely the price is, or the market is likely to come back and then take it out. Okay, and also same applies to um double pattern, right? Equal lows and equal highs. Okay, equal lows and equal highs. So the first one that I did was an equal high. This is called equal high, and you always see them in the chart. Okay, people trade this actually, the first touch, and then they trade the second touch as a resistance. And then we have equal lows too, like this. Equal lows. And what we say about this is that at a zone like this, it attracts price, okay, to come back there and then run over it. Okay, so that is what we mean by support and resistance liquidity. Okay, support and resistance liquidity. Support and resistance liquidity. I hope you guys understand what I just explained. Please don't get it twisted. Let's focus on what I'm drawing right now. I'll give you examples on the charts. Okay, good. So moving away from here, we also have another type of liquidity called the trend line liquidity. Okay, and what we mean by the trend line liquidity is that anytime that there is a trend line, let's say there's an uptrend, right? We say this is a lower low, okay, sorry, a higher low, and then we have a higher high here, and a higher low, and a higher high here. And in one of my videos, I explained that these lows are expected to not be broken. And once they are not broken, okay, once they are not broken, we are still in an uptrend, right? And so when something like this continues to happen, there is a whole lot of people actually putting in orders here. Okay, so now there's liquidity here, there's liquidity here because people are buying from there. People are buying from there, right? And so all these places that people are buying from attracts the market to come back and run over it because it has to come and take all those orders. Okay, so the market will come and run over it like this. That's what we mean by trendline liquidity. Do you get it? That's what we mean by trendline liquidity. I'll give you another example. Something like this. You have a downtrend, okay, and people will sell from here. Price will go down, break structure. People will sell from here again, go down, break structure. People will sell from here again. So do you get it? For every retracement, people are selling. For every retracement, people are selling. So now what does the market do? The market knows that there is a lot of orders here. Okay. And then when you sell here, okay, when you sell at this level, 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 you will put your stop loss at this level. You put your, let's say when you sell from here, you put your stop loss at a level like this. Okay. And when you sell from here, okay, when you sell from this place, you put your stop loss at this high. When you sell from this place, you put your stop loss at this high. And when you sell from this place, you put your stop loss to at this high. They are all orders that are attracting the market. Do you get it? So the market will eventually come back to that place and do what? Take it out. Do you get it? So now something like this will happen. Have a market structure shift, and then boom, the market will take everything. So that is what we mean by trend line liquidity. Okay, trend line liquidity. So when there is a trend, okay, when there's a trend, there's an obvious bearish trend, there's an obvious bullish trend, and then price is selling from every supply, and then price is also buying from every demand. Just know that every demand and every supply eventually is going to be taken out by the market because there are a lot of liquidity there. And what is liquidity? Liquidity is what actually moves the market. Liquidity is liquidity is a level, okay? It's a level in the market, right? That there are orders resting there. Okay, there are orders, and when we say orders, buy orders, sell orders. Okay, when you buy, it's an order. When you sell, it's an order. Okay, so anywhere that you actually open the market, an obvious place that you entered based on your strategy, there is liquidity resting there, and the market will eventually come to that place. Right? Right? So let me give you an example of such liquidities on the chart. Okay, and then I'm going to use the gold chart because gold has the most obvious, liquidities, right? So let's get into the 15 minutes chart. It's going to give us a lot of, all right, so let's use this level as an example. Okay, this is what I mean by equal highs. Okay, equal highs. This is an area, right? Price came, tested, and then went down. Okay, just an area that price came, tested, and then went down. So it means that the price wasn't able to break through that area. Sorry, guys. It means that price wasn't able to break through that area. And what would we expect? What we would expect is that when price comes to that level again, it would sell. And do you know one funny thing that happened? Price actually came to that area and actually sold for a while until it ran through the liquidity, right? Taking all the others here, taking all the stop losses here, okay, and then it came back down. Do you get it? You shouldn't focus on the fact that it came back down. What you should focus is the fact that price actually came back there and took everything out. Let's give another example. Let's give another example. Another example. All right, so we have something here. Another resistance here. See this level, right? This level. See this level, right? When you take a closer look, this is the first touch. Okay, so when it first touches there, that's when we realize that okay, something is happening. And on the second touch, the price wasn't able to break through. That's when we establish that that certain area is a resistance area. The price, it is resisting price. Okay, support means it is supporting price from falling. Resistance means it is resisting the price to actually break through. Okay, and so anytime that the price come back to that level, okay, it moves away, break structure here, comes back to that level, we expect it to fall back again. We don't expect it to break. Okay, and what happened here? Price came to this level, and of course it went back down. Okay, now we've established that this place is a strong resistance, and when price comes there again, it will not be able to break through. But look at what happened here. Price later came back down and went right through it. Right through it. And why is that? Because since people entered here number 1, entered here number 2, entered here number 3, it has been established that there are a lot of others resting above here. There are a lot of stop losses resting above here. And so price needs liquidity. Market needs liquidity to move. And so since there are a lot of liquidity here, since there are a lot of others here, the market has to come back there and take all of them out. Take everything out. Either it runs through it or goes back into the range. It doesn't matter. The only point is that the price has to take them out. And so if you have already traded and you are not a beginner and maybe you've had an experience with the market, you realize that sometimes the market will go in your favor like this. The market will go in the direction that you expected it to go, but then before it actually goes to that direction, it would hit your stop loss. You'll be taken out of the market before it actually goes in the direction that you expected. And you would think that, oh, come on, you'll be frustrated. Okay, you're not a bad trader, you are a good trader, just that you forgot to understand liquidity. Okay, you forgot to understand that price needs liquidity, and that certain level, okay, that very level that you sold, okay, that very level that you sold here, okay, means that the market will come there eventually to take everything out. So sometimes you have to wait for all of them to be taken out before you actually enter. Right. So I'll give another example of liquidity. Okay, I'll give another example of liquidity. Another example of liquidity. And this time I want to focus on trend line liquidity for you to also understand what I mean by trend line liquidity. Oh, I'm having this sore throat. Okay, so I'm I'm really struggling right now. All right, so an example of trend line liquidity is this. Okay, and let me make this color red. Okay, red, right. So here's another example of trend line liquidity. Okay, you see, we are using this um level. Okay, we are using this level as our trend line. This level. Okay, so as you can see, what is this trend? This is an uptrend. Just this area. Okay, I want you to focus on just this area. Okay, that I've marked, the area that I've put in two arrows. Okay, it is an uptrend because you have what, series of higher highs, higher low. You see this low wasn't broken. Okay, this low wasn't broken. Series of higher high, higher low, higher high, higher low. Once again, this low wasn't what, breaking. Higher high, higher low. Do you get it? This low wasn't what, broken. So we are still in an uptrend, right? And this failed to make a higher high, but didn't break this higher low. So we are still in an uptrend. Okay, so here's the higher high, and then look at what happened here. Okay, let's just end here and look at what happened here. You see, since this is an uptrend, okay, people will enter on this trend line. Okay, people enter when the price touches this trend line. People will enter when the price touches this trend line. So there are a lot of what, orders resting below here. So everything that I'm explaining to you right now, I'm not saying it for saying sake. I'm actually telling you what happens in the market, right? And so with these orders, they are all liquidity. With these buys that people bought from here, they are all liquidity, and then they will put their stop losses below places like this. And once again, price needs liquidity to move. Okay, so the moment you see price doing something like this, okay, moving in a trend line like this, moving this way, just know that eventually all of them will be run over. Okay, and in this example, everything wasn't run over, but then this low was still taken out. Okay, this low was taken out, and there's liquidity here. So sometimes price doesn't need all the liquidity, but then eventually it would come here and take everything out. Okay, so I'll show you something good. Exactly. So you see all these liquidities that I was talking about, all these liquidities right here, that only one just got swept, right? Only one just got swept like this one was taken out. What happened? Eventually the rest was also taken out. This one got taken out by this. Okay, this one got taken out by this, and then this one also, all these got taken out. They got taken out by what's happening, by this candle too. So do you understand what I'm trying to say now? That's what we call trend line liquidity. There are a lot of orders there, and eventually they would need to go. Okay, people have put in their buy stops there, their sell stops there, and price needs to count for it, right? If you are struggling to understand the concept that I'm teaching right now, don't worry. I'll come back to this again when I'm explaining the strategy that I use. Okay, but you have to understand this first, and then if you're not really understanding it, you can send me a message, right? You can send me a message, and I'll find time, okay, to explain it to you where you don't understand. So liquidity is almost at everywhere in the market. Just that, just that there are obvious places that liquidity is resting. A place like this, okay, a level like this is a lot of liquidity. A level like this is a lot of liquidity, and eventually price would attack this place. Okay, eventually you can draw this one out on your chart, and then later you see that price will come to this place. So when you go into your chart, just go and look for patterns that look like this. Just go and look for something that looks like this and see what price did later. Okay, just you will not see something that's so equal, but then we have something called relative equal highs or relative equal lows. They are not very equal, as in they are not equal, but then they are quite equal. When you see something like this, okay, when you see something like this is what we call relative equal high. And why is it relative? It is not actually like equal, but at least you can see that they are not really that far from being equal, and that's why we call them relative equal highs. And then this turned over is what we call relative equal low. Okay, so you go into your chart, you look for things like this, and you realize, and then you watch how price reacted when it happened. Okay, you watch how price reacted when it later came back to that place or that level. Okay, now I want to tell you guys something about what we call inducement. Okay, and then what is inducement? Inducement is also another form of liquidity, but inducement is a liquidity that actually um, um, deceives you to think that you have missed an opportunity. Okay, so with smart money traders like me, okay, we have this, and then we have something we call point of interest. And when we get there, I'll explain everything to you, so then get confused. Just put the keywords in your head, okay? And we expect the price to do what? Come back to this level, okay? Um, let me delete this, and then so something like this. Good. When something like this is marked out, we expect price to come back to this specific level, okay, so that we can sell again. Now price actually comes back to our level, but instead of price tapping into our level, okay, into our point of interest, it doesn't, but rather does something like this and then moves away. Now when something like this happens, as an inexperienced trader, okay, or as someone who doesn't have patience, it's happened to me a lot of times until I actually came to understood what inducement is. I would think that price didn't get to my point of interest, and the price is moving away from my level, okay. So what would I do? I would jump quickly into this trade and take a sell. Now, do you know what happens later? This is what happens. Price comes back here, take me out, because I'll put my stop loss somewhere around here, take me out, and then now goes in. So this level is inducement. Okay, this level right here is called inducement. Okay, inducement. I'll definitely spot inducement wrong. Good. Do you get it? This level here is an inducement. What did they do? It induced price. It induced price for us to think that it is moving away and then we have missed an opportunity. Meanwhile, it just had to create liquidity for price to move. Since there was no liquidity here, this had to happen. Okay, this had to happen so that price will come back for that liquidity for everyone that entered here, everyone that sold here. Okay, everyone that sold here, that would put their stop loss somewhere around here. It has to happen for price to later come back, take everything out, and then finally get to a level and then sell. Okay, this video is getting quite long. I'll end this later. Now let me give you an example. Okay, let's use the replay button. Okay, let's use the replay button. Right, so an example is this. Okay, an example is this, and we are going to watch how price reacted here. Okay, so this rectangle, okay, is my point of interest. Okay, this specific rectangle right here is where I expect price to come back and do what? Buy. Okay, come back here and then move up. That's what I expect. I expect price to come here and then move up. Okay, so now let's see what happens. Okay, let's see what happens. Right there. So as you can see, price came to that level right here. Price came to that level right here, but I didn't get to my level, but it was so close to my level. It was so close to the level that I was expecting price to actually touch. So now since price came here and then it didn't do what I was expecting, it didn't do what I was expecting, like price touching this level. Now I would think that the market is moving away from my level and I have missed an opportunity. Okay, and I have missed opportunity, and then as an inexperienced trader, I would do this. Okay, put my stop loss somewhere around here. Okay, thinking that the price have moved away from my level or I've missed an opportunity. But let's see what happens. If you're watching this carefully, you see one would think that the price actually went and never came back to that level that I was expecting it to. But as a trader, you have to learn how to be patient and wait for the right time. Okay, have to wait for the right. If you mark that place as your point of interest, that is where you enter. Okay, you don't enter anywhere aside that place. Let's see what happened. So as you can see, price later came back to my point of interest, and anyone who entered here, now if you didn't take profit early, okay, because someone might enter here, and if you're lucky enough you take profit somewhere here, someone would want to go up to this level too. It's normal for someone to want to take profits here too, but the important thing is that price later came back, took out this place, this level. Now if you can see, when we talked about the double the relative equal lows, okay, or the double bottoms, I pointed out that this is a level, okay, of what support, okay, this is a level of support. And then as you can see, price first gave a first touch, now the second touch here. So now we know that this place is like a strong what, a strong support level, okay, a strong support level. Now price went up, and funny enough it came back again into that level, went up, and what happened now, we've established that this place is so strong that it cannot break through. But that's what liquidity wants. Liquidity wants you to think, okay, the market wants you to think that that place right there that you think it cannot break through, they will need you to think that way, so that it eventually would take everything out, okay. And now it came to the point of interest where you expected price to come and then react. It came there, and then what did it do? What did it do? Went up, okay, just go up like that. Do you get it? Just went up like that. Do you understand inducement now? I have another example to show you, okay, another example. Because I've all my trades, okay, every single trade that I've taken, there is inducement, okay, every single trade that I've taken, there is inducement. Screenshots, yeah, right here. Sorry. Okay, so as you can see right here, um I don't think I can use this picture. Let me try and find it on the chat if I still have it. So I'm going to show. I don't like keeping I don't like keeping lines on my chats, so I just delete them afterwards. Okay, so normally sometimes it's hard to find them when you need them. Okay, good. Let's take this one as an example. Okay, an example again. So here's another one. When I'm done with this, then we'll be done for the video, and then we'll move on to our next session. We have this place, okay, this rectangle place, okay, I've marked as my point of interest. Okay, this rectangle is where I expect price to do what, come back into it and then go up. So what happened here is that price moved away from my point of interest, and then it came back to that place. But what did it do? It didn't enter my point of it didn't touch it, but rather induced it, okay, deceived me or anyone, okay, and an inexperienced trader, okay, that doesn't wait for liquidity to be taken, to think that the price actually moving up. And this sometimes you are so lucky that you win the trade, because this one actually, if you entered here, this one actually went too high. that you wouldn't even think that you've lost anything. But that's not how I trade. I wait for liquidity to be taken before I enter a trade. So even though this could have been a winning trade for anyone who thought price moved away from their point of interest and then they entered here because they think they missed it, it would be a winning trade. But that's not how I trade. I will still wait for liquidity to be taken. So this inducement, okay, is liquidity. This right here, the place that I've marked right here with dash line is inducement, and it's also liquidity. And so what did the price do? Price eventually did what? Came back and took it out. Came back, took it out, entered what we call point of interest, okay, where I expect price to come back, and then it did what? It came back into it, and then now it moved upwards. That was my intended direction, okay. And anytime that price actually induces and then comes back to that level, okay, come back to your point of interest and it moves away, just know that wherever that inducement price went, however high that price went, when price finally comes into your point of interest, it is going to go way further above it. This happened here, and it also happened at the other side too, okay. It also happened here too. Here is the inducement, okay. Here is the inducement. Price went that high up, came into the point of, and if you are right, price will always go above it. It will always go above it. So waiting would give you more profit. That is the power of waiting. As a forex trader, you need to learn how to wait. The concept of liquidity is so hard to grasp sometimes, so it takes so much time to explain. And even if it takes so much time, then sometimes the students still struggle to understand what you mean, okay. So we have the trendline liquidity, we have the support and resistance liquidity, that are the relative equal highs and the equal lows. And then we also have the inducement. And I say inducement is a type of liquidity that is always, okay, near your point of interest to deceive you into thinking that price is you have missed an opportunity, okay. And then it will later be taken out, and then it comes back to your point of interest, and then now it moves in the expected direction. So this is it for our lectures on liquidity. And if you don't understand anything, let me put my number here, my WhatsApp number: 0257589244. You just call this number. Sorry, just test this number on WhatsApp, okay. Ghana, test this number on WhatsApp, and I'll find time, okay, to explain to you, for you to understand what I mean by inducement and liquidity, okay, in case this video doesn't help you. All right, thank you very much, and we'll meet in another session.